elevation. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200-foot yacht, she wanna see the coast.
Welcome back to the channel, Goofy Investing, where we talk about investing in the stock market. We're going to do a stock analysis on a requested ticker. This is a Patreon promotional, which means it'll go on the Patreon first, but follow on YouTube shortly after. This particular one, I'm going to post on the Patreon and then right away on YouTube. So hope you guys enjoy it. This ticker was one of the requested ones from one of my captains, actually. And one of the higher tiers that I have. So Patreons that are my members that are on that higher tier, they're typically more advanced. They've been with me for a while, so they have benefited a lot from from instructional and coaching and stuff. But a lot of them coming in there already were pretty good, and now they're just getting better and better. All right, as we all are. So let's get into this. All right. Rely. All right. Ticker RELY. Remitly Global. All right. This trades on the NASDAQ. $13.55. Market cap's $2.79 billion. All right. So small cap territory. All right. Right in my neck of the woods. Good so far. All right. Let's get a little, let's go down here. This is an American company. These guys are headquartered out of Seattle, Washington, and they provide digital financial services internationally. So their main offering and their whole business model is centered around B2B on international transaction between businesses, using USD stable coins within their platform and so forth. Very effective, very easy. You got to think of them more so as the B2B PayPal of international presence. Okay. That's kind of how I view them. There's a little more to it than that, but we're going to get into all of that. So for all extensive purposes, they're a transaction and processing service. Looking at the month here, notice November 5th, stock fell off a cliff. All right. The stock went from 16 and a half ish all the way down to 12 and a half ish, just like that on a drop of a dime. And why is that? Well, they reported earnings here on the 5th of November, which they beat, and they did a real good job. However, the company has guided that it's going to be a rough 2026 where they're going to deliver high teens of growth. Of course, the market is not going to like that. So, so they get downgrade ratings and all this different stuff happening to their equity. Let's look at their performance thus far, all right, on their actual reporting standards. So a couple beats here and there, or a couple misses here and there, but nothing crazy. For all extensive purposes, they have a real good track record of beating. So if I'm in a stock like this and, I'm looking at this as their track record, then I'm feeling real good going quarter to quarter on their earnings skills. Okay. So I've digested the earnings call. I've looked at their business model. I've looked at their 10K. Let's go over their 10K right real fast. I did the sniff check. I went through all their 10K and so forth. I don't see any derivatives or anything crazy out there. They are audited by the PCAOB. So everything auditing all checks out. All right, guys. So now that we got that out of the way, right? Let's talk about the management team. And let's talk about how I assess them and, what I've taken from the earnings call and my whole impression of them. Okay. So this is a co-founder, CEO-led company. All right. Matt Oppenheimer. All right. And this is a young management team on a quest for growth. that checks the box. That's really what I like to see. But I was very impressed with the management and how they are running this business, how they carry themselves, how they're navigating through different situations. Capital management, management of capital, of how they're investing back into the business, I think is okay. I think they're gonna get better and better at it. One thing I've noticed within this company and their business model is this is actually a company that uses AI within their own algorithms and within their own business structure to help benefit their own company. So this company is not necessarily selling AI, they're actually using it to make the business more and more efficient. All right, through underwriting processes and so forth. All right. The way that they presented themselves on the earnings call is very impressive, is very methodical. um, let's just say that I've been looking at a lot of companies. I've looked at a lot of stocks and a lot of companies within this market cap range for several and several years. And I have not seen a company more well run than this at this market cap range. All right. And that speaks volumes. All right, guys. So that's something to consider. Now, the way that they run through the actual earnings is they actually literally do a slide pitch deck while they're doing the earnings call and citing each slide, and each exec or executive have their batch of slides. Okay. So the CEO manages this slide deck of slide, or this portion of slides. Then we move on to the CFO, where he has his own slides that he updates. It's very methodical. And throughout the whole earnings call, I noticed that they are citing, moving to slide this, according to slide 9. Okay, now we're moving on to slide 10. And it's snuck in there. Everything's organized so that way, while you're going through the earnings call, you can follow along really well with the slide deck. Um, and typically companies of this, that are of this market cap, typically they're less defined, they're rough around the corners, the investor relations maybe need some help. you know I don't assess that with this company. This is pretty much a class A company when it comes to how they're running it. All right, so there that is. um, so one thing that caught my eye, all right. So other than the high teens and reduction of growth due to immigration standards, all right, they they have assessed, they've pretty much said, immigration headwinds and are weighing on their customer acquisition costs, deportations, ICE, all that good stuff is hitting some of their customer cohort. And that's going to be why they're guiding down, as well as they're just being conservative as well. Let's look at some stuff here. Valuation, let's look at their cash. 476.90 million in cash, 35.49 million in debt. Net cash, enterprise value of 2.35 billion. This company is cheaper than you think. All right. And they also have a $200 million buyback running. All right. Now, will that serve to reduce shares against their stock based comp, against their dilution rate? No, I don't assess it will. I hope I'm wrong. But we'll go down to their basic weighted average share count, 203 versus their diluted weighted average shares outstanding of 213. So a little bit of a gap there, okay? There are some RSU units or internal insider warrants happening right there, all right? That's the gap, all right? When you run your projections, you're looking at diluted weighted average shares, because by the time your projections hit, you got to anticipate that the diluted weighted average shares outstanding, those options are going to materialize and dilute. All right. So with the actual buyback, I assess that um, all that it will do is like slow the dilution drastically. Maybe it bridges the gap between the basic weighted average shares outstanding and the diluted weighted average shares outstanding. I'm good with it. And with the $200 million buyback, I agree that this company is undervalued. Uh, Quite frankly, I think it's really undervalued. All right. So there's that to consider. Let's look at their growth through consensus estimates. So they're going to do 28% by the end of this year. I have no doubt they'll hit that. Next year, they guide the high teens. Analyst consensus estimates put them at 18.27%. Do I think that they do high teens? I have a feeling they're going to do around 21% of growth. That's just a hunch that I get, just based on everything, and moving forward. So, and then let's look at the actual peg on the non-gap. We're trading below the 1 on the peg. So the growth first, the consensus estimate for the next 2 years is, I think it's less than what they're actually going to do. Second, their actual non-gap forward PE is drastically under even those undervalued or underrated consensus estimates. So there is a lot of delta there of gains that, a lot of people, gains of opportunity that a lot of other investors are pretty much not seeing here when they're doing the analysis on this company. So growth isn't really priced in. In fact, it's kind of a joke that they're trading this cheap on the non-gap PE. All right. We'll go to their other valuation metrics. EV to sales on a forward basis is less than 1.5. Okay. Strong growth, strong track record of growth. This is a growth company. This is a growing company. All right. Um, I'm very impressed with what they've done thus far. All right. So there's that to consider. Now they have a free cash flow component. We'll go to their profitability metrics, healthy gross margin, um, EBIT, trailing EBIT, EBITDA, net income, positive. It's a profitable company. We'll go to their cash flow statement. They're booking profitable net income. Will go on a quarterly basis. They have 3 consecutive quarters of profitability. I anticipate that they will probably keep that up with how they're running this business and how they're growing, all right, with cost discipline and so forth. Leverage free cash flow. Not only are you getting growth, you're getting leverage free cash flow on this. Nothing to sneeze at either. A little bit under 10% leverage free cash flow on the trailing. On the forward free cash flow, let's look at their cash flow statement. Levered free cash flow versus unlevered free cash flow versus levered free cash flow. Here's the misnomer. The free cash flow, a lot of it ain't free. What I mean by that is unlevered free cash flow is the cash flow that they receive prior to fulfilling debt obligations, paying debt interest, whatever. All right. So the difference is levered free cash flow is really what's really organically left over for the investors. Right. Not big of a gap. So, nothing really, not really a big deal. But the actual free cash flow that they're putting up, guys, and for what this market cap is trading at is a compelling thing. They can fuel that buyback. They can reinvest that money right back into the business. They could build up the balance sheet, whatever. All right, whatever they want to do to use those free cash flows. These free cash flows is really a luxury. A lot of the businesses that I've seen to be invested in, a good chunk of them don't have this luxury of those free cash flows to help. Think of this as an additional yield to support the equity. All right, that's how you got to view these free cash flows. All right. But if you're investing for free cash flows and the free cash flows are not going back to the investor via dividends or buybacks, I assess you're investing for the wrong reason if you're going into an equity or where management team is reallocating those free cash flows. All right. All right. So let's talk a little bit about their business model and some introductive things. So um, they've come out with some new. They've come out with Remitly One, which has this flex option. All right, so there's a send now, pay later. They, really good launch on it. They got 100,000 paying customers on that thing, and essentially, businesses, they have accounts payable and they have accounts receivable. And with that, sometimes they need to pay up front on their receivable faster than they would have anticipated getting that liquidity. And so, what Remitly One does on this flex option is it allows these businesses to you know, Remitly will front the money, and then that business will pay it back later. And these are credit worthy businesses. However, they're not generally accepted by financial institutions and banks where they have traditional, really good credit scores. All right. So I like that they have an AI. They have an AI property that actually gauges that credit worthiness, and they have underwriters as well, which a majority of the management team in this actual business were actually underwriters in the industry. All right, so I mean, really well positioned. They're very flexible, very agile business with a very good management team. All right. So insider ownership, okay? Insider ownership's at 5.61%. I would like it to be a little bit more, I'll admit. All right. That doesn't mean that it can't go back up. They might start buying shares, if the stock gets cheap enough. That's something to keep their eye on. I have checked the insider transactions, not much activity happening there. So we're not seeing any buys as of yet. All right. This is a company that I'm going to be keeping an eye on. So quick disclosure, I do not own this. I don't own a position in this company. This blacked out position is my next play. If you've been following along on my channel, if you're getting value out of this, hey, subscribe and click the thumbs up. Check out my Patreon. $10 a month. Really can't beat it for the value you get on there. Great community of investors on there, growth investors. Get more direct access to me, the hidden gem collection, deep dives. Be amongst a lot of the cohort of higher level investors. $10 a month. I got a free trial running on there. Now that free trial, last minute chance, guys. This free trial is going out. This free trial is going away on the 1st of December. Okay, so today and tomorrow is your last chance to participate in that free trial, and then this membership will be capped out to a limited of 35 members. Okay. So I assess that that'll fill up real fast. All right. What do I think about Remitly as a business, as an investment, and the investment proposition? All right. This is an easy multi bag. I got them. I wouldn't be surprised if in 5 years their stock is right back up to IPO prices around 44.50 to $60. Several multi bags in 5 years. All right. As far as their growth and the strategy of how I would do it, I'd be buying this month over month. And not financial advice to anybody. This is just what I would do. The stock will be flat for a good several months, and I would just DCA in heavy every month. Not heavy, but a certain amount to build up a really good position. Me personally, I can't buy the equity. I already have a finance play, and my little secret is I don't like to invest in financials and I don't like to invest in banks. But I'm a firm believer that every portfolio needs one. So I got SoFi. All right. So, but with that being said, my family, my daughters, my wife, I manage their portfolios. If you didn't know, I'm probably going to be opening up positions on this company in their portfolios. All right. So I think it's a strong buy. If it can pass all of these, I tell you what, guys, if it can pass all of my strict criterias, and I say it's it, I mean, hey, it's got to say something, all right? um hey, with that being said, I appreciate all y'all's support. I hope you all got value out of the video. Like and subscribe, comment down below, say I'm subscribed. I will respond back. If you have any questions, comment down below. I thank y'all for all your support, and take it easy.